Thank you so much, Chamberlain. Good morning, everyone. Welcome to Business Morning on on Sunrise Daily, and of course, it's on Channels Television. We do about 30 minutes of business on this side of the studio before we head back to Sunrise Daily. We start from the global space where oil prices were stable on Friday as investors considered the latest comment from the United States Federal Reserve on interest rates and sticky inflation, which signs of firming seasonal U.S. fuel demand lent support too. We take a look at the numbers and we see red is the color, but not so red, just very slight, marginal 0.01% in the red for Brent at $81.38 a barrel. WTI is also red, a bit more red than that, $76.86 for the WTI. Both benchmarks are set for a multi-month low, with Brent crude futures closing at the weakest point since January. And then we know some officials there from the US Fed have been saying that they will be willing to hike borrowing costs again if inflation surges. However, Fed Chair Jerome Powell and other policymakers have since said that they feel further rate hikes are unlikely. So we know that the eye is no longer on September, which was a likely month for the rate cuts, interest rate cuts. Has moved to November and is even shaking at this time. Meanwhile, strengthening U.S. gasoline demand was helping to stabilize prices ahead of the Memorial Day holiday weekend, which of course begins tomorrow and is considered the start of the U.S. summer driving season, which will do a whole lot of change to the demand for oil. We come to Nigeria and take a look at the dollar. After just about 2 days of appreciation, it's back to the dropping session. And so we see NAFEM yesterday was down. It was down 1.58%. It opened at 1,462 naira 59 kobo, but closed at 1,485 naira 66 kobo. NAFEX, which is the less active compared to NAFEM, you have 1,478 naira 80 kobo. That's what it's opening with today, after it opened yesterday at 1,458 naira 4 kobo. That was down. I mean, we see the gap here not so much, 1,442 naira. And this, of course, begs the question, was the appreciation that we saw, I think 2 days, was it just because of the CBN's intervention last week? Can we continue like this, especially as we celebrate the first anniversary of the President Bola Tinubu anniversary? It will be time to look at those policies, the merging of the rates market. How efficient has that been? That and a whole lot more have later on Business Morning, subsequently on Business Incorporated later on today. So you don't want to miss any part of it. Now, the Chief Executive Confidence Index for manufacturers in Nigeria went up 53.5% in the first quarter of this year, and that's from 51.8% in the last quarter of 2023. The Manufacturers Association of Nigeria announced this at a meeting in Lagos. The association attributes the slight increase to the anticipation of clearer government policy directions and the marginal appreciation of the naira in March, which led to lower import costs. According to the president of the Manufacturers Association of Nigeria, the central bank's persistent rate hikes to combat inflation have not produced positive results, prompting him to make several recommendations.
Man advocate for robust collaboration between monetary and fiscal authorities and suggests considering the following policy measures. Implement targeted interventions aimed at mitigating the underlying cost push factors driving inflation, thereby alleviating the financial burden on manufacturers. Prioritize forex and credit allocation to the manufacturers and fast-track the proposed recapitalization of the banking sector. Emphasize the development of infrastructure within industrial hubs and bolster nationwide investment in renewable energy sources to alleviate logistic expenses and enhance competitiveness by driving down the energy cost. to further reduce the reliance of the country on imported products and raw materials by providing incentives for investment in backward integration and local sourcing to reduce the pressure on the dollar to the barest minimum.
So the Rural Electrification Agency has been really busy these days. Yesterday, we did talk about their partnership with Husk, that's taking renewable energy to rural areas in the country in partnership with the private sector. Now, in a major move towards universal energy access, REA, that's REA, and the Small and Medium Scale Enterprises Development Agency, SMEDAN, have signed a memorandum of understanding, and this partnership is supposed to provide micro, small, and medium enterprises with reliable and sustainable alternative energy solutions.
Country. The MOU that we are signing is not just a normal MOU as we agreed with you. It's going to be an MOU with a clear implementation framework and that will have clear focus areas. The first focus area is energizing the small and medium enterprises. When we had the initial discussion with you, one of the challenges you thrown at REA is how do we provide electricity to these small and medium enterprises. We designed a program within REA that is called Energizing Economies, which we want to embed a large chunk of energizing small and medium enterprises in it. The Energizing Economies is a program specifically focusing on energizing markets. And we have done a pilot of markets that we have mentioned, Sabongari, Araria, Shura market, and we want to scale that up. We have now done a number of feasibility studies for a number of markets that we want to now start energizing. It is our belief that this project is a bankable project that we don't have to intervene by providing capital subsidy.
So there you have it. All of this, of course, will culminate in the assessment of President Bola Tinubu's led administration 1 year after they began work. So we'll talk a little bit about that. And one very big factor with this administration is, of course, that pronouncement that President Tinubu made on the day he was inaugurated: subsidy is gone. And people have said that a lot of the things going on in the country is because of that statement. What if subsidy was not gone from May 29, 2023? How would it have looked like? We have joining us now to help us paint that picture and some others, Mr. Johnson Chukwu. He's the Chief Executive Officer and the founder of Cowrie Asset Management Limited, joins us virtually from Lagos. Mr. Chukwu, thank you so much for your time. So what if the president did not make that statement, subsidy is gone? What do you think would have happened in the country with the economy at this time?
Well, Ini, thank you for having me. It would be at the realm of conjecture what could happen in the economy, but I will try to hazard a guess on what we would have been dealing with. At the macro level, in terms of inflation rates, we may have had an inflation rate that is below the current 33.69%. Remember that as at April last year, inflation rate was 22.22%. That's one factor. Then we may still have been dealing with a more volatile exchange rate, principally because a lot of the imported fuel go to neighboring countries. So the demand on our FX could have been higher than what it is today, because when the price of fuel was adjusted upwards from about 187 naira to about 528 naira or so, or 68 naira, the volume of fuel that was being smuggled to neighboring countries decreased, and therefore had impacted positively on our demand for FX. So we may have had to deal with a weaker or a more volatile exchange rate. But for most average Nigerians, what is impacting them most is the inflation rate. Food inflation came at a print of 40.53% in the month of April. So if you look at that, probably we would have been dealing with a larger depletion in our foreign reserve. Let's put it that way. Because if the government had maintained fixed exchange rates, or what they then called managed exchange rates, they would have been trying to support the FX exchange rate, the foreign exchange rate with the reserve. Another thing that would have happened is that the amount of money that is going to the 3 tiers of government wouldn't be what it is today. So the 3 tiers of government would have been struggling to meet their obligations, particularly salary payment. As you may know, that not many state civil servants are now crying of arrears of salary payment because the states are getting enhanced allocation. In the first 4 months of this year, total allocation to the 3 tiers of government about 4.6 trillion naira. That's the highest in the history of this country. So we may have been dealing with public sector financial difficulties that is impacting on meeting the obligations to particularly the public servants. So on the balance, I think we would have seen, which I said you have to hazard a guess on what we will be. We would have seen more stable price levels. We would have seen a weaker reserve, and then we would have seen a more constrained fiscal space for the federal and state levels, at the federal and state levels.
Well, even as we speak, there are conversations that subsidy has been reinstated. I mean, even the IMF has said that subsidy will cost Nigeria about 8.4 trillion naira this year. So, I mean, at this point, there's a lot of uncertainty as to, at this subsidy on petrol, in this case, it's still existent or is not.
Well, I think there's actually no debating the fact that subsidy on petrol exists today, but the magnitude may not be as it was before the removal of subsidy or before the adjustment. The subsidy that came back to haunt us now is because of the depletion of the local currency or devaluation of the local currency. Clearly, the landing cost of fuel is higher than the pump price. If you adjust for government intervention, then you could be talking of a pump price that mirrors the price of diesel. You know that diesel ranges between 1,200 and 1,400 today. And if you look at ICE, that is the international price of fuel per metric ton, it's going to be in the region of $750, $800 per metric ton. So if you use the number of liters in a metric ton of about 1164 liters per metric ton, and compute based on current exchange rate, because exchange rate is a major factor in the landing cost of fuel. The exchange rate is about 1,500 naira. You will be landing, if you factor in all your costs, throughput cost, cost of finance, payment to NIMASA, payment to NPA, the freight charge, you'll be landing the product in the region of 1,000 naira. And then when you add the marketer's profit and their other expenses, you may end up with a pump price of more than 1,000 naira. So clearly, there is subsidy on fuel principally because exchange rate depreciated. I did some analysis when the presidency subsidy is gone, and I found out from the NNPC what rate they used to arrive at the 568 naira to a liter. They used an exchange rate about 750 naira to the dollar. And so if naira had remained at 750 naira to a dollar, maybe even with movement in ICE, you could still be buying fuel at maybe 700 naira, 650 or 700 naira. But today, exchange have moved to back to 1,500 naira. And if you have to factor in that exchange rate, then you clearly admit that subsidy has crept back into the pricing of refined petroleum product, particularly fuel.
All right, Mr. Chukwu, thank you so much. And we know that this conversation, this is the beginning of it, this period, I'm sure the whole of this month. But thank you for sharing your thoughts and perspective with us this morning.
Thank you for having me.
All right, now we're still looking at the economy 1 year into the President Bola Tinubu-led administration, and we're looking at hospitality and real estate now. We have a group managing director who's overseeing those two areas in his company, Dr. Edward Akinlade. Dr. Akinlade is the group managing director of Holding McCall PLC. Dr. Akinlade, thank you so much for your time and good morning.
Thank you for having me.
Yeah, so how has the President Bola Tinubu-led administration treated you? You have a company, you're overseeing real estate, you also have hospitality. How has it treated you in the last 1 year?
I would say mixed bag. we have the positive, we have the negative. But let me start on the negative. I think the enabling environment for our industry has been basically squeezed. Our cost is going up. Somebody has to pay for it, and the customer, or we increase the room rates, we increase our prices. But the common man out there will suffer from the effect of what we have seen in the last 1 year. It's not. I will give them probably 30%. Why?
That's so low.
Yes. Why? The enabling environment should be attracting more inflow into our industry. We can contribute more. Real estate is the driver of many economy worldwide. We have seen what Mrs. Thatcher did in the UK. Now, hotel industry, people will always come for business, especially we are focused more in Lagos. We are seeing increase in occupancy, but our cost is being squeezed. Let me give you one example. One of our hotels in GRA, we recently got a bill from Ikeja Disco. Last month, the bill was 1.5 million. This month is 5.5 million. Who pays that? Who does that? So therefore, our room rate has to go up. So our customer will be sweating. Also, it will affect our business. So on that aspect, very tough, very, very tough. On the real estate, construction, prices are going up, rents are going up. Why? Cement prices is up, FX is up, because most of the thing we use, we have to import it. Inflation is not helping. Interest rates now, close to what? Close to 27, means that we can't borrow. If we borrow, the business is non-performing from day one. Interest rates in Nigeria, I believe, should be in single digits. We need to pressurize our bank to move interest rate down. Probably the CBN. But I know what they will say. It's inflation that is making our interest rate high in Nigeria. But on the positive, I believe this is a short-time pain. In the medium, long time, it will be better.
Wow, it's good to end on the positive. But I mean, it's this time last year, it's the campaign and the pen and the tension and all of that. Do you think that any other of the front-running candidates, that were running for this election, do you think if any of them had gotten into Aso Rock, that things would have been different?
I don't want to go there. The public knows my view, but I'm on Omoeko. I will always support.
Okay.
I will always support.
So we know where you.
Yes, I will always support Omoeko. But here's the fact: 8 years of Buhari scattered it all. It will take time for this government to get on with it. 1 year, maybe too short. If Atiku or Obi won, they will still be going through this period. But don't forget one thing: confidence. If the international market have confidence in Nigeria, if we ourselves have confidence in our country, the result will be different. Because confidence is what will make our exchange rates stabilize. The CBN, the Minister of Finance, has been trying everything. It's like throwing the bucket at it all. Just keep on trying everything. But everything is not giving us the results.
Why? Why do you think so?
Because of confidence.
You think we don't have confidence in the administration?
No.
Or the international?
In the policy of the CBN
in the policy.
And the Minister of Finance. We are trying everything.
Is it because the policies are not right? Or is it perception built over the years?
Yes. I think, for me, it is what I call flip-flop policy. One policy today, on the same matter, you wake up tomorrow, you do another one. For example, look at the BDC situation at the moment. It is not helpful. You cannot tell me I need to come and reapply for my license in the middle of the game. So I have brought all this money into Nigeria to trade in, to open a BDC at the airport, and suddenly you're changing the goalposts. No, it's not done. Policy depends on not a static position. It must be fixed for a while. When you want to change it, call all the stakeholders, not just they wake up in the morning, boom, a new policy. That is what is killing our confidence. And until we do that, our FX rate is going nowhere.
That's sad. But you did say that, and I've heard this also. Perhaps it's too early, to judge this administration. But at what time do you think it would be to give them a fair judgment?
I will say 2 years.
So by this time next year, we
yes.
should be able to objectively say this administration has done well or not.
Yes. Remember, during the days of Buhari, throughout that 8 years, all we were hearing is, give us more time, give us more time, give us more time. Unfortunately...
And we are afraid that's what we might be hearing here now.
No. By next year, I will not give them more time. My views are out there. I will not give them more time, because if by next year we're not seeing changes, but I know when they will start performing. So let me give you the wisdom today.
That's what they're campaigning for the second term.
By 2026, all indices in Nigeria will change. I can assure you that. It's my prediction.
You don't need to be a prophet.
Yeah, because who will vote them in after 4 years? So it's a short-time gain. 2 years, it will hit us. But by the time we get to 2026, Nigeria will be better. Investors will come. Money will come. Inflation will hopefully go down.
That doesn't sound like a good thing, Dr. Akinlade, because it sounds like something that will be used to entice voters to only vote for a second term, and then after that, things may just get even worse.
Yes, well, it's done worldwide. Every time, look, if you see what the Conservative government is doing in the UK at the moment, they're bringing rates down, encouraging voters, and in one way or the other. But the voters of Nigeria are clever now. They are wiser than what it used to be. You can't use 5,000 or 10,000 to induce voters in Nigeria. Those days are gone. But the reality is this: 8 years of Buhari government damaged Nigeria tremendously. What they were doing at the CBN, unknown to anybody. But it will take the current government time to fix it. It's like timbers on top of a timber in a forest. You have to take the first one off. But the one at the bottom are thick. So we're into the thick now. It will be tough. But I can assure Nigerians it will get better. Politicians always have a way of making it better as we end towards the next election.
In the first term.
Yes.
But when you say it should be better, or you say we should give them 2 years, that is about this time next year.
Yes.
What do you see? What are the indices that will indicate that we are now better?
Well,
can we go back? Can we go back to 150 for $1 or 200? Do you see that?
The CBN governor have already given us a target. He said the FX rate should be around 700. So all he's doing at the CBN is working towards that. And like I said, to achieve that is confidence in policy, not flick-flop. He will. What I'm seeing him at the moment doing is settling down. Soon, he will not be bringing on policy, so he will settle. So I can see that happening in that direction. So the FX rate will move back. It is what I would call a butterfly exchange rate. It goes up, it goes down. But the long-term trend will be downward. So as we go into 2026, I expect the rate to come down. I'm not saying 700, tough. To achieve that, he needs to bring in probably $50 billion to achieve that. But this morning...
$50 billion is not leaked out in the usual holes that are existing in different parts of the market.
Well, this morning, announcement came that they have been able to raise 20 billion naira. I don't know where from, but if that comes in, even the BDC operators will be laughing all the way to the bank, because they know that they have to, whatever they're keeping. Look, FX is in Nigeria. FX is in Dom's account. FX is in our foreign account worldwide. Nobody is bringing it out because of lack of confidence. Once you give me confidence, the money I have in Dubai, in Israel, in London, in US, I will flow it into Nigeria and I will invest. So confident. But like I said, they are working towards that, achieving that goal.
And you think by this time next year, at least, we should be able to give them some pat in the back?
Call me back this time next year, and I will give you what I have seen, why it is getting better.
I'm going to put a reminder on my phone. I hope you will answer me when I
will
call.
do, definitely. Even if I'm in China, I'll be here.
Okay, all right. I'll hold you to your word. Thank you so much.
Thank you.
Dr. Akinlade, thank you so much. Dr. Edward Akinlade, the Group Managing Director of Holding McCall PLC, for your assessment. I'll see you this time next year by God's grace.
Thank you for having me.
All right, now, so let's look at a bit at market numbers, how it closed yesterday. Well, I can tell you, since I was on the stock market report, that it was not green, it was red, and we lost our 98,000 level at 97,978.02. It dropped 0.18%, and also lost the 500 that would normally have here. You know, we like the 55. But that has gone. So it's 55.42 at the close of trade yesterday. Profit taking is still the name of the game at the NGX as the fixed income. And you know, the fixed income has been, I think there's an auction also today. Yesterday, there were the results of the auction which Anyeti Ede talked about during Business Incorporated. I believe he has updates or details of today's auction, or that might come on Monday, since it will be at the close of trade. So it seems the fixed income market is actually stealing all of the shine, even the little ones that could have come to the NGX. Look at the numbers there. Treasury bill at the close of trade at the fixed income market yesterday, 219 deals. That was high, you know, worth 229.89 billion naira for the treasury bills. The federal government only 10 because it was treasury bills that was on. I think it's treasury bills also today. 10 deals, 7.04 billion for the federal government bonds. Omo of the central bank hasn't been very active. It's the treasury bills for now. Only 6 deals yesterday. Most of them in the secondary market, you know, not the fresh incoming of securities. But we'll give you more on this. Aneti Edet will be here to give you fresh numbers, intraday numbers, the auction and conversations all around that. And a full package of 55 minutes will be coming your way at 1 p.m. I'll be here also, so you don't want to miss it. Ini John McQuarrie, let's head back to the Sunrise Daily Studio.